Hello, this is Andrew with Aecom Investments, where we are still bridging the gap between security and opportunity. Hey, listen, guys, I've received a ton of questions over the last few weeks. A lot of you have been asking about our buying criteria, whether it's still the same or if it's changed. Are we flipping? Are we holding? How are we performing our market analysis now with COVID-19? All of these are great questions. So what I've done is I've committed to taking just a few minutes here to put together a short series of case studies to hopefully answer some of those questions for you. So this is the first. It certainly won't be the last. There will be more coming soon. All right, so just as a really quick high-level recap for those of you who have not worked with us before, Aecom Investments is a residential real estate provider, and we work with smaller individual investors. Many of them have self-directed accounts like IRAs, solo 401ks, and we show them how to increase their profits through turnkey real estate, which is a benefit to them. First of all of the heavy lifting is done for them. It's a total hands-off, push-button approach where we locate and acquire distressed properties. We stabilize those properties by performing all of the rehab on the property. We also place our qualified tenants into the property to generate cash flow from the property. And of course, after that distressed property has been converted into a cash flow generating asset, now we are able to offer it to our buyers at a discount. All right, so before we can take a distressed property and convert it into a cash flowing asset, there are some things that need to happen. First, we need to do some in-depth analysis, and those happen in three key areas. Number one, the financials. Number two, the geographic. Number three, the property itself. Now, let's take it piece by piece. When we talk about the financials, actually what we're referring to is a set of monetary targets that will determine whether we move forward with the deal or not. Does it make sense, right? Is it going to make money and be profitable for us and our partners? That's the question that we ask every single time we get ready to purchase a property. And we have rules in place to make sure that we're making a profit on the deal. And we base these numbers on the end sales price that our buyer will pay for the property. And again, that's to lock in the profit before we buy the property. So here's what we're looking for. We're looking for a target ROI of at least 15%. Based on the markets where we buy and sell properties, this is easily achievable, and it's standard for us to achieve a minimum of 15% on every single deal, which is important because we want to make sure that there's enough profit to split both with our partners, and we want to make sure that our buyers have enough equity cushion within the deal also. The next thing that we're looking for is low all-in costs. And by all-in, I mean the purchase price plus the rehab that we've put into the property does not need to exceed 65% of the market value for any given property. Third, we're also looking for properties that fall within a certain range. And the reason this is important is because we don't want those properties that are priced so high that the majority of our buyers will not be able to take out a loan to buy the property. We want to stay in that sweet spot, which is plus or minus 25% of the median price per property within a given market. All right, so what exactly is a market? Well, we could just say location and we wouldn't necessarily be wrong, although what we're really referring to is a metropolitan area that usually consists of several smaller submarkets. And these are the areas where we and our local field experts have determined that it's more profitable for us to buy and sell properties. Of course, this is all a product of predefined criteria. Now, the question is, what is our criteria? And that's what I get the most inquiry about. We invest in those territories in the very center of the country. We go as far north as Wisconsin or Michigan and as far south as Texas. Now, we're not necessarily looking for big metropolitan areas within those regions, but we're more inclined to invest in markets where the population is less than 500,000 people or less than 100,000 people in tertiary markets. Now, in many cases, we target even smaller micro markets where there are a lot of houses and there are a lot of houses that are selling quickly because the properties in those areas are in high demand. And we can usually tell when we're in a strong micro market when we can find 3 or more properties within a given area that have sold within the last 6 months. So what is our ideal property type? Well, the correct answer is it depends, because no decision to buy a property is made without first considering both the financial and the geographical factors. It's nearly impossible to have a one-size-fits-all approach to analyzing properties. After all, we've purchased everything from one-bedroom efficiencies to 50-unit apartment complexes and everything in between. Now, with that being said, there are certain properties that we tend to see more than others. And coincidentally, those same property types are the ones that we tend to profit from the most. And they are properties that have 3 and at least, or 3 bedrooms and at least 1 bathrooms. They're less than 2,500 square feet. They're built in the turn of the 20th century. And they also have advanced level rehab needs. Now, what makes this property type most profitable is its wide appeal to the largest demographic of buyers. What I mean by that is we've got multiple options. We can sell to a real estate investor that just wants to buy and hold it as an Airbnb rental property, or we can fix it up, sell it to a first-time home buyer that qualifies for FHA financing, or we can even 10x our profits by offering a creative financing opportunity to a blemished credit second chance homeowner at above market pricing. What I'm saying, guys, is these properties tend to offer the greatest profit points because we can easily position them for a variety of exit strategies. And that, guys, is the secret sauce. Stay tuned for the next upcoming video where I step through a live case study demonstrating these very same principles in a previous turnkey project.